Welcome to CouncilCast, news, bites, and insights from the Council of Insurance Agents and Brokers. I'm Sandy Laycox with the Council's Leaders Edge magazine, here with Sean Kevelighan, Chief Executive Officer of the Insurance Information Institute. How are you doing today, Sean?
I'm great. Thanks for having me. Good to be here.
Thanks for coming. We're excited to talk with you. We're going to dive right into some questions.
Sounds good.
First, discussing the rise in extreme weather events that we've witnessed lately, including weather trends, the uninsured rate, and the economic effects, and how the insurance industry can help address these issues.
Yeah, it is something that we see and that the statistics are behind. So you're seeing, if you can go back to 1980, and actually Munich Re does a really good job of this where they visualize it for you. But if you can go back to 1980, you'll see a significant increase in terms of frequency and severity, most of which are in the meteorological or hydrological storms and flood type events. So we see something happening. And what we try and do, and I think is important for the industry to focus on, is less about what I call the politics of what's going on and more about how we get to the solutions. And that's a real opportunity for the insurance industry is let's look at things and let's focus on resilience. And let's see how we can mitigate the risks and make our communities more resilient. This is what we do as an industry, and I think we're well poised and have a really good opportunity to do that. Some of the opportunities we have are also government-based initiatives. So this year we see that there's a reauthorization of the National Flood Insurance Program. Can we modernize that program? Can we take it away from just unfortunately, politics are getting in the way of the private industry getting more involved in flood, and I don't know that unfortunately will occur in this new reauthorization either. But can we make it more resilience-based instead of recovery-based? Also, we hear a lot about infrastructure spending. We're going to spend $1 trillion potentially on infrastructure. Can the industry help and educate people? And there are coalitions like the Build Strong Coalition that the industry sponsors about helping educate. And if we're going to spend money on infrastructure, let's make sure that it is ready to withstand what we're seeing in terms of natural catastrophes.
Can you discuss the storm in Puerto Rico a little bit for us? What industry is coming into play there, and how insurance is playing out there? And I know it's early, so whatever early insights you may have.
Well, right. We're still in the middle of a very active hurricane season, and we are seeing the impacts through the hurricanes Harvey and Irma and now Maria. And these are all different events in a lot of ways. So you saw with Harvey a flood event, you saw with Irma a wind event, and then you see what's most different for the Maria and the insurance market is there was a significant amount of industry built in Puerto Rico with the likes of pharmaceuticals and others. So that's why we're seeing a pretty broad spectrum in terms of the amount of costs that the industry could incur, especially on the commercial side. As a result of Maria, you really saw a spike in those estimates. I think it's still too early to tell exactly what that is. But we are seeing analysts predict that you could see rises in reinsurance rates and rises in commercial. What exactly and how that works, we'll see. On the personal side of things, it's a little different, right? Because they're so heavily regulated. Rates tend to rise based on where the catastrophe happened because they're regulated not to change. It's, in fact, in many states illegal to change rates broadly as a result of an event, let's say in Texas. So Texas, you might see increases in comprehensive automobile coverage. And then in Maria, I do think it's a commercial impacted event, which I know is a large focus for CIAB. So we're going to keep our eye on that. But it's a different one than what you would usually see in the Caribbean, for sure.
Going back to your suggestion for sort of getting out of the politics of the programs and into what the industry can do in terms of resilience, do you have any specific suggestions for our listeners, who may agree with you but not sure how to go about educating or helping their clients in that way?
So it's a lot about understanding where people are and where the risk is happening. And the trends are, and they've been around for years, Americans and people around the world love to live in risky places, right? And so as a result, they've got to know what those risks are. And they need to, when catastrophe strikes, there's an opportunity there. And in fact, I think there's going to be a good case study that comes out of the difference between Irma's impact and Harvey's impact. So Irma, in the state of Florida, after Hurricane Andrew, you saw building codes go up and get more solid in a lot of ways, right? And I think we're seeing that AIR did an estimate of Naples, Florida. And with the exception of like motorhome communities, it was largely untouched from Irma, right? And then you look at Harvey, where in that area in Houston, the building codes are virtually non-existent. So you're going to see actually an illustration and a comparison of communities and what resilience does. And I think as an industry, we need to make sure that we're helping our customers understand the value of that. So if catastrophe strikes, how can you build forward instead of just building back to the way that it was? That's a really key component. Moving is sometimes a necessary evil or option because you just need to move out of these areas, but it's very hard to do. So I think we as an industry just need to educate our customers about what risks are out there. I think technology is going to help out with that in a lot of ways and allow customers to more easily understand and appreciate the risks that they may face. And if they understand that, then we can educate them more. It's unfortunate in flooding actually that our customers are not as educated as they could be. And honestly, the reason is because the private market's not there. So if you think about what we could do with flood, if the private market was in there and it was able to market itself like we see this industry in other areas like automobile insurance and home insurance, right? And we're able to educate people. I mean, floods impact 90% of every major catastrophe, right? There's a flood issue in every one. So we've got to increase our education about that, not just to help people appreciate why insurance helps, but also appreciate what it's going to take to mitigate the risk. Because honestly, the insurer and the customer does not want to suffer that catastrophe and that loss that can happen. So education is important.
And can you talk a little bit more about the types of technology that's emerging that might be able to help educate and give people some of that data that might help sell the need to them?
Yeah, there's a lot of work, I think, and a lot of discussions being done in technology, actually, for how perhaps we can look at public-private partnerships. The U.S. government is one of the largest holders of data, right? And this industry is built on data. So is there a way for us to work together to bring the data to the industry and for the industry to help create models and understanding of where the risks exist? So that is an area, and we're seeing the discussions happening. We've seen actually member companies of the III working with the federal government to help them understand, because they're actually not holding on to the data because they want to. They're holding on to the data because they don't know how to release it. So the insurance industry can actually help and is helping firsthand with getting some of that technology there. The other side of technology, though, that's really neat is the value that it can create and the value that it can create to the customer. So if you look at studies that have been done from the likes of McKinsey, we hear a lot about those certain what I'll call disruptors in technology that are trying to upend the market, right? Much like Uber did or Airbnb did. But McKinsey actually says of the $9 billion that's going into insurtech right now, 61% of those insurtech companies are actually looking to drive value into the system, eliminate some of those pain points that the customer and the broker experience, get the claims paid faster, get the underwriting done faster, hold a contract in a secure place, allowing people to access in and out in real time. So technology is going to drive a lot of value, and what I would say even a lot of societal value. And that should be exciting for us in the industry.
Absolutely. And I think that, here we've been talking a lot about technology, and there's a lot of that conversation going on in the industry. And it would be great to hear from you how our brokers at this point in time should be thinking about technology and how to form partnerships to work with it without, spending so much money on things that aren't going down a path anywhere.
Yeah, and there are good tools. I think one very important message for the broker community to I think appreciate is embracing the technology, right? There seems to sometimes come across that technology is going to try and take the broker out of the whole system. I think the relationship is just going to get stronger as a result of technology, because the broker is going to have to spend less time searching and looking at various policy comparisons and things like that, because technology and artificial intelligence can help them do that, and they can spend more time with their customers. And especially when you get into the complex commercial cases, that's what they need. You need that relationship there. So I think the relationship from technology is only going to get stronger from the customer to the broker and the carrier. And I think that's important. But then if you're interested in getting more involved and understanding where the technology is, there are initiatives and tools out there that are worth looking at. So one initiative that's out there right now is a group called Plug and Play. So it's out of the Silicon Valley. Now, plug and play is what started Google, is what started PayPal, Dropbox. A lot of your household name big technology companies came out of this incubator called plug and play. InsurTech is now their number one focus. Everybody wants to know about this business of insurance and how they can get more involved in it. So that's one area, becoming more involved. And we see a lot of our members. There is an InsurTech focus group, if you will, and it's now their biggest focus group. Every Wednesday, they bring in InsurTech companies to do a Shark Tank type of exercise, give their elevator pitch in front of the carriers and see how they can add the value. So that's one area where Plug and Play welcomes more insurance companies and brokers to get more engaged. There are also other tools out there. For example, the Insurance Thought Leadership Group has Innovator's Edge. And this is an aggregator of virtually all InsurTech companies are out there. And you can look how they're financed, you can see what they do, but you can see how they're working as well. And that it's a really interesting tool, and I'd recommend anybody who's interested in finding out how can technology help my business, take a look at that tool as well.
It's great advice. Let's talk about auto a little bit, switching gears a little bit here, although it does fall into the technology realm. What do you see as the future of the auto industry, and how does insurance evolve with that?
So the future of the auto industry, I think in, let's say, the short and midterm, on the personal lines, you will still see an increase, right? Again, referring back to a McKinsey report on technology, they focus in on the auto industry, and they predict that by 2025, in fact, profitability of the insurance industry will go up by 2x. And the reason being is technology is going to come in and create some more efficiencies, create better underwriting and things like that are going to help the industry. Now, after 2025 and up until 2035, the prediction is that there's going to be a shift. You're going to get semi-autonomous vehicles, you're going to get autonomous vehicles. Just because these vehicles are not necessarily crashing due to human error does not eliminate the risks associated with it. Now, it might transfer the risk from a manufacturer, from the actual individual back to a manufacturer, but there are risks. There will be risks there. These are moving vehicles. These are big technologies that are connected. So you're just going to see a different shift, I think, in the automobile market. And in that same report, they predict that even after 2035, the profitability of the industry, after there perhaps is a shift, is a 1.5x, again, increase in profitability for the industry.
You have also mentioned in the past the Insurance Information Institute's mission to help people understand the value of insurance. And we hear a lot about, the importance of a translation piece. Mm-hmm. How do you do that, and why is it really important at this point in time?
I think I'm in this position in some ways, and why the III is successful is because we try and be simple-minded, and I'm a simple-minded individual that tries to put myself in the place of somebody coming to our website or hearing us speak or having to explain something to a journalist or a policymaker. And we try and put it in those terms that are easier to understand, because the truth of the matter is you can't have a developed economy, a thriving economy, without insurance. It gets this label as being a grudge purchase and things like that, but it's driving economic growth almost more so than any other industry, right? So we oftentimes are in the shadow in financial services of banking and securities, right? Well, if you look at GDP and insurance, banking industry contributes right now about 2.9% to GDP, and the insurance industry is 2.8%. Then the securities industry is 1.3%. So insurance is more than double in terms of contribution. And then jobs, we've got 5.8 million jobs, and we've got jobs that are going to be ready and available. We talked a little bit about that, I know, in these sessions here during the conference. But simply, nobody wants to start a career in insurance. Everybody fell into it. I think the speaker today said he fell into it backwards. And that's a job where we're trying to make people also understand insurance and what a career in insurance means. I think all of us that are in the industry realize it's a great career. It's got great balance. You can do virtually any type of job. You want to be in finance? We got it. Asset management? We're one of the world's largest. Want to do marketing? One of the world's largest in marketing. You can't watch network television without seeing at least 3 insurance commercials in a half hour, right?
That's true, yeah.
So we've got a lot of opportunity in the industry. I think we just need to communicate it more, and that's what we're focused on at the III, is getting a little bit more proactive in some campaigns, and we're going to focus on talent. We hope to work with the council on that one in particular, get on campus together, those types of things perhaps, but also telling that economic story Focusing on resilience will be another thing. So there is a lot that the insurance industry does to serve and better society. And so we just believe it needs to be communicated, but we've got to communicate it in ways that people listen.
That is true. Is there anything else that you want to leave our listeners with about the III or any of these topics?
This event is just a great illustration of the importance of collaboration in the industry. So we have talked a lot here about disruption. We talked a lot about what's going on in natural catastrophes. There's disruption in man-made catastrophes, all of those different things. And this is a big inflection point for us. Technology is another disruption. And I think the more that we can come together in events like this, the more that we can speak in the same messaging and the same tone to our customers, we're going to be stronger, and we might be able to move that needle in terms of the reputation and perception, which is there for the taking for us. We've just got to make it happen, and I think collaboration is going to be a big part of that.
Well, thank you so much, Sean. This was great. And this, again, is the CouncilCast, news, bites, and insights from the Council of Insurance Agents and Brokers, coming to you from our 2017 Insurance Leadership Forum.
Thank you.
Thanks a lot.